Welcome to Charts Today. My name's David Linton, and today's edition for Tuesday, the 21st of March, comes to you from London. And the big thing that markets are now waiting for is what will the Federal Reserve do tomorrow. And we put out our poll yesterday morning. 24 hours later, we've got the results in. 3,315 people voted, and basically the majority of voters are voting for a 0.25% rise to 25 basis points. So really quite interesting to see that that's where the market is. I did a poll just a couple of weeks ago, less than a couple of weeks ago, about where would interest rates go to in the US, and more than half the people voted 6% or above. If I ran that same poll now, I think the answer would be very different. And in fact, the Fed were originally thought to be raising around 0.5% to this month's decision. That's now been curtailed to 0.25%. Most people still believe that inflation's a problem and that the rates will still go up, but just by not as much. A third of voters said no change. The Fed will sit on their hands, and a very small percentage, 7%, can see a cut with everything that's been going on. But the key thing is the expectation for rates has come right down, and that's quite a good sample size, 3,300 voters on LinkedIn. So really quite interesting to see that that's what the market is expecting. So tomorrow, when that announcement is announced, we'll see quite a lot of volatility and quite a few things in the run-up to that announcement and soon after. The other effect of all the turmoil we're seeing is we're seeing a plunge in energy prices, and we'll look at the energy mix as we always do at the end of this. Remember, you can watch Charts Today at chartstoday.com. You just go to that website, you put your email in there, and you'll get alerted every time Charts Today is out. I don't always post it on LinkedIn, but just occasionally I do. If you want to see it every day and get alerted to when it's come out, you can watch it there. And the interesting thing here is just looking at how forward curves have changed over the last 6 months. This was the curve 6 months ago, and the difference that you would have had to pay for LNG forward just 6 months ago was a massive compared to where we are now. Went from $5 to $70. We've fallen all the way back to $13, and consequently we're seeing the forward prices. I love the way you can overlay these charts on Updata. This data coming from OTC Global Holdings, and we include quite a lot of their data with our software. So really one of 3 dozen feeds that we're compatible with. So we'll look at the markets first of all. We start by looking at the currencies, then we'll look at the global indices, and last of all commodities, and then energy. So we're looking at the dollar index here. Notice how it hit the cloud support. This is the weekly, the daily, and the 60-minute chart. I'm running on Refinitiv Icon, but in Updata I run on lots of different data services. You just plug and play, pull them in as you want. So here we see this is Refinitiv Icon data. We're pulling back, having found support on the cloud. Now we're finding resistance, and now we're back to finding support. And that's long term, we're still bullish, but these levels now of 100 and 105 on the dollar index are really, really critical. Will we see the dollar sink further? Short term, we're below the cloud, the 60-minute chart. So there's my long term, medium term, and short term view. Short term and medium term, we are bearish on the dollar. Long term, will this trend break? That's what we're waiting to see. That means that euro dollar is actually looking bearish on the long-term chart, but on the medium and short-term charts looking more and more bullish. And if we look at sterling, we're sitting at 122.50 today against the US dollar, again just holding that cloud pattern there ever since the last few months, where we saw the recovery off those lows from the disastrous mini budget in the UK last year, and we are now sitting in those low 120s again. Against the euro, sterling sitting at 113.50-ish. Really has been sideways trading there. It's all about dollar versus those currencies. Bitcoin, we talked about Bitcoin yesterday. Very big target there on the 0.5% chart to $50,000, some 80% higher, and that's looking really quite strong there, having broken that 25,000 level. But of course, we've still got work to do on that long-term chart. Looking at the US markets, took the the UBS Credit Suisse deal in their stride yesterday, and we saw a rise in the Nasdaq. It's actually looking bullish on the short term. Will we come back to make a new high and activate this upside target? That's the big question. And if we look at the futures today, we're up nearly 1% on the S&P future and 0.75% on the Nasdaq future. Long term, we still are bearish below the cloud, but medium and short term looking stronger. Watch these shorter term targets. They're going to be the key. And interestingly, there on the S&P mini, not much left to play for. On the medium term, we still do have this target to the downside. The FTSE future is up 1.5% this morning, so that's looking stronger. And of course, we've got a UK interest rate decision on Thursday. They'll be very pleased to be going behind the Fed with their decision. So all eyes will be on that for UK markets and what that will mean for sterling and stocks in the UK. And looking at the Xetra DAX, we're up 1.75% this morning, holding on to those bullish trends on the medium and long term, not quite yet in the short term. Japan was still down 1.5%, the worst performing market in Asia overnight, so just struggling there. But the other Asian markets, we saw the Hang Seng up 1.4%, but has really had a seesaw this year, having risen and then fallen back. It's the market that's risen and fallen the most this year. We put out a post on LinkedIn on that yesterday. Looking at the Sensex, we are up 0.75%. So that's looking a little bit better, but again, one of the worst performing markets this year has really just sunk lower. And the Aussie market had a really bad day on Monday, bit better on Tuesday, bouncing off those moves that we saw, but it is medium term bearish and moving back into long-term bearish. So for Aussie stocks, not looking so good. Gold, yesterday we did see gold rising above $2,000 momentarily. We see that there on the 60-minute chart. The target to 1995 was passed, which is bullish, and another target to $2,023. That's still in trade. We've got a little downside target here that's been activated. If you're trading gold, you need to watch the 1 minute targets. And if we look at US 10-year yields, of course, there's going to be a lot of volatility in the run-up to that decision from the Fed tomorrow. But if we look at the US 10-year yield, we're seeing here that is sitting steady at around 3.5%, 3.55, and really just starting to move into bullish territory again, having found support at around that sort of 3.30 level. So going to be really key to watch that tomorrow. And looking at just European bond markets, the Bund had a torrid time over the last year or so, a long end to a very long run in the Bund. So we're still long-term bearish with downside targets for the medium term, but shorter term we have seen a recovery off the lows there. That's the bond price rather than the yield, of course. Now looking at the energy mix, we've got Brent crude up 1.3%. $70 is now the new key level on Brent, and in fact yesterday I did pull up a weekly chart. This is my daily and my 60-minute chart. If we pull up a weekly chart of Brent, it's quite interesting. If we just put the automated trend lines on there, I love these lines. It just tells you where to look back in the history. And 65 and $59, 65, 60, these are the levels that are really key to watch. So do keep an eye on those levels. Looking at the emissions price, we're back above 90. We said in our morning call this morning we needed to get back above 90. We're up 2.75% there. Good news that we're back above 90. 85 is the floor. We fall below that. That is not good news. Good that we're making new highs above that previous low. Maybe we're starting to see the recovery there. US gas, TTF is up 0.5%, having made new lows. Still not great looking charts below the clouds here. We do have downside targets still in train to the high 30s, and then one even lower to 28.50, and the same with MBP. We broke below that $100 pence mark yesterday, a pound per therm, and we are seeing here a little recovery today. Keep an eye on those 1 minute targets. And of course, then last of all, you want to keep an eye on German power, Cal 24. The level here is 130 euros. We've got downside targets to 119, 127, 124, 127 here, 129. It looks like 130 will break. Just based on the targets that we're seeing. So that's really quite key. US Nat Gas, last of all, up just 0.75% today, so but still looking very bearish there as well. And we went out as bearish in our morning call to clients. If you want the morning call, just let me know and we'll sign you up on the email list. That's it for today. Until tomorrow, markets await the Fed. Until then, happy charting. Bye for now.